Fair to say you simply flooded the system with money. Yes, we did. That's another way to think about it. Fair to say you simply flooded the system with money. Yes, we did. That's another way to think about it. Fair to say you simply flooded the system with money. Yes, we did. That's another way to think about it.
All right. That's another way to think about it, right? One of the main reasons why we should be very cautious because they are very cavalier and not caring about mismanaging your tax dollars. What's going on, everybody? Peace, power, and profit to you all today on this Way Back Wednesday. Today is FOMC. Actually, it's Fed Minutes Day, right? We call it what it truly is. It's Fed Minutes Day, right? Literally in about 5 minutes, we will get the Fed Minutes report detailing the extent of their meetings leading up to their typical meeting for the month that's coming up here shortly, where they will discuss the need to continue, their gas pedal mandate of raising rates. I think we have a 75 basis point rate hike in the cards for this month of July, unless something changes. Wall Street will have to digest that if they haven't already, whether it's priced in or not. We will find out, right? We will definitely find out, right? So, hence the question of the day is, are markets able to take rate hikes, in stride, right? Because some will say that they are, then others will say, well, possibly, maybe not, right? But we will find out, right? Nonetheless, because markets are trying to figure out, it's just how far can they go with all this economic, headwind value information becoming a problem in terms of them being able to solidify a bottom in this marketplace and build from a place where they can just stay, I guess, maybe neutral up until we get a lot of this rate hike, quantitative tightening flushed out of the market, right? But I would say that's a losing battle, right? It's almost, but it's the worst thing to be planning for, right? So as always, we've been very cautious in telling people to be very, prudent. Make sure that you are very conscious about, where you place your money. If your dollar cost averaging in, make sure it's notable in a stock that has a great balance sheet, money on the books, free cash flow, can weather these storms, so to speak. And hey, from there, do what's necessary for you to build wealth, right? And create wealth, because at some point we know this stuff is going to fade. And then the markets will kind of have a place where they can assess all the damage and start building from there. But as of now, it's too early to tell, right? It's too early to tell, right? So as you see, guys, we do have the link out there. If you want to come on the panel, you're welcome to come on today, right? Again, happy to have you guys in the building. We have Oprah Chris already in the house today. Shout out to him today on this way back Wednesday, right? Go subscribe to his YouTube channel if you see him in any space that you're in. Chris Woods is his name, Chris Logic, right? Go subscribe to the tribe, be a part of the movement. We're pushing the value of, well, again, information over, disinformation, right? All right, we are the fact checkers that fact check the fact checkers, right? All right, so we are definitely, happy to be here and share in the wisdom of the markets with you. So as you see again, literally about 2 minutes here before we hear the Fed minutes come out and detailing whether or not they're going to raise that 50 basis point or not. Oh, excuse me, the 75, 75. Or they may just do 50, right? Maybe that wasn't necessarily a feeding slip, right? We will see nonetheless. And we'll see how these markets respond. But as of now, just kind of using this as a backdrop to what we were discussing yesterday when we went live and discussed, certain levels of the marketplace here and detailing exactly what the market may be trying to accomplish in terms of, possibly trying to find a somewhat pseudo bottom, if you will, a short-term bottom. I think we kind of, came to a consensus to a degree. We're playing around at 375, up near 380 at this point. Anything below that would be problematic. Anything above that would be, I guess, reeling the fact that the bulls feel like they got this double bottom right here at 375, 373, 374, if you will. Anything, again, at that point of support is risk on for us, the markets is concerned. And we witnessed that once before, right? We had this back testing scenario that came about after this last little move we had going back on June 30th when we closed out the month and the market closed down. As you see, the market is kind of pulled back right now. And now it's kind of fidgeting all over the place. So the minutes just came out. Of course, it's 2 o'clock. The minutes just came out. So that's why you see the market kind of fluctuating a little bit here. This is on the hourly chart. So it's going to be a little bit more methodical in its movement. Won't look so rigid unless I was looking at the 1 minute. As of now, there you go. You got the market spiking up here a little bit. Matter of fact, let me change the charts, right? You can see this kind of real-time price action here. Let's go to some of my smaller charts here so you can get a good detail exactly what the price action looks like here and whether or not, again, it's going to hold or not, right? Because more than likely, this is just that initial reaction before they really begin to parse the straws and see exactly what the numbers are detailing, right? As of now, the market's kind of somewhat holding this, somewhat short-term, short-term value. Be it that we closed above 381.96 yesterday, we're kind of slightly below that as of right now. We got as high as right about 383.61 today. Of course, we had 384 on our radar potentially today. We got close, but not close enough. Of course, we fell short around about 40 cents in that regard. But nonetheless, the day is still young, if you will. 2 hours before the market potentially shuts down. Still enough time because we still have imbalances to kind of flush out. We have the power hour session at 3 o'clock, where traders can really digest what's going on. And that's it. So as of now, I'm reading that, watching Bloomberg here in my office here, they're saying that the Feds are signaling somewhere around a 50 or 75 basis points. So they don't have a concrete number nailed down within these FOMC minutes. And that's I'm not going to say it's unusual, but it is somewhat them, trying to signal to the stock market that they're still somewhat data dependent. I'm pretty sure they would use those words if they had the chance to, and that they're seeing some softening in some aspects of the yields coming down. We spoke about that yesterday as well, and we're going to get to that as well because we did have an inversion this morning, right? We did have a yield inversion this morning, right? So with that being said, again, this idea that, right, you got my little alerts going off right here, all right, as always on TradingView. All right, with that yield inversion, that definitely signals that there's more problems that they can't just overlook in terms of a recession, right? The 2s and the 10s, right? The most notable marquee yields inverted today, 2-year over the 10-year, right? 10-year has been pulling back. There's no secret there. We kind of discussed yesterday that we may see a bottom on the 10-year, maybe around about 270 area, right? 2.7 value on that yield. And so today, you kind of saw it kind of marching up a little bit to the upside around about 2.8 and change, right? I go look at it in a minute here, see if it's changed, since then. But for the most part, that yield inversion definitely denotes that, the recession value of the growth, and the debt to equity ratio, and all the things that come along with seeing people feeling a little bit more skittish about holding that long-term debt really begins to signal that, markets are beginning to slow a little bit more than they were trying to say, let's say earlier in the springtime, that it was not so much of a big issue, that they would be able to land this plane softly, and that, recession fears were no more than just hyperbole coming from a lot of people who did not understand the economics. And this was coming out of the White House, mind you. Janet Yellen, Jerome Powell, his camp, the governors, a lot of these, again, uber bullish, Wall Street analysts. And today, of course, they're singing a whole new different tune, right? It's funny how, that everything was all good just a week ago, right? Somewhat in their mind. Turns out the data says everything except what they're trying to, propagate, right? Of course, we're watching the yields. We've been watching the commodity markets. We've been trying to see exactly, exactly where we're going, into the back half of this year, right? So as of now, the first half been in the books, as of June 30th, really saw a lot of, inherent weakness that we were already forecasting. And it showed a lot of the, if you will, again, the ideal that the Federal Reserve as a whole, the institution of, banking and finance, the whole nine, they were not as, prepared for what, what was really flushing through the markets in terms of commodity prices being very unstable, the Ukraine-Russia scenario not necessarily kind of coming to a head, and a lot of these other markets around the globe began to kind of circle their own wagons, right? They began to be very, frugal in terms of how they were looking at America in terms of how they would do business with us, right? Why? Because, I think they were beginning to really start to figure out now at this point that, it is a dog-eat-dog world. And as much as they look at us as the kind of the superpower to somewhat emulate if they could from a democracy standpoint, but when it comes to business, they were like, maybe we need to kind of reevaluate that, right? We'll come back to the drawing board and discuss these things later, right? But nonetheless, again, we're here, right? We're in the building. We're happy to have you guys in the house, all right? What's going on, family? Vin Faction in the building, right? Shout out to you. Shout out to our family Yoda in the house. We'll see you as well on YouTube as well, all right? Yeah, so today is just the minutes, right? When the minutes come out, they're just pretty much putting out a precursor, right, of what's to come when they do actually go into, their meeting, right? The meeting, their actual FOMC meeting itself, right? So hence it's just more of the paperwork. It's the, we're going to release our white paper, our roadmap in advance. And then next time we meet to discuss or actually implement rate hikes, then in the class, they will be able to kind of talk through those particular bullet points, right? So today there will be no speaking of Jerome Powell. However, there are Fed governors who are speaking today. They are definitely Fed governors, right, within this board who are speaking today, right? Some of them already spoke this morning. If I'm not mistaken, was it today or was it tomorrow? I might be wrong. No, actually, Williams spoke this morning. So Williams did speak this morning, right? Fed member Williams, he spoke this morning, right? And so, tomorrow we have maybe like 3 or 4 of them speaking tomorrow, right? So that'll be very interesting because, hey, this is when they kind of get on their apology tour and get out there in front of the public and say, well, it's not this, it's not that, it's, it's whatever, right? It's whatever, right? But we'll be definitely paying attention to that as well. Again, just kind of putting out some of the information I'm seeing popping up here on my news feed here with my notification push. I'm gonna post this in the back chat, some of the information with them somewhat signaling, rate hikes, right? They're trying to get this story, somewhat in control because they've been very wrong in more ways than you can imagine. And so they need the public to somewhat, fall in line a little bit to exactly what they're doing, right? Given the fact that their credibility has been kind of thrown under the bus, we talked about that before, and how detrimental that was and what that looked like, amongst, a lot of other economists who put a lot of faith in the Feds in terms of their stock portfolios, right? Their investment thesis. And now, they're kind of really, really eating a lot of bad, bad losses right now. And that's weird. You thought about it from a place where, like, were they not looking at the same thing that we were? Were they just really that naive, right? Or maybe they're just that, again, bullishly cavalier. But nonetheless, they are definitely eating a lot of bad losses right now.
And so as of now, again, it says Fed members talk up front loading rate hikes to extinguish rate high inflation. Of course, it's just based upon the Fed minutes that just came out. And it says, so let me get over here real quick and just share this real fast. Hey, oh, but Sonny, I think you're trying to come into the building, fam. You might have to go out and come back in. It's not allowing me to add you in. For some reason, it's showing that it's not allowing me to add you for some reason. So maybe it's a connection issue or whatever, right? But here, real quick, let's run over here and check out the some of the data or the, I guess maybe the news surrounding this ideal of rate hikes, right? So as you can see on investor.com, one of my favorite websites, right? One of my favorite websites. And it says Fed members talk up front loading rate hikes to extinguish red hot inflation, right? We know red hot inflation is literally the what? The paragraph of the what of the year, right? Right? Or the sound bite, if you will, right? If there ever was one. Right? It says Federal Reserve policymakers favor front loading rate hikes to rapidly move monetary policy to restrictive stance to extinguish red hot inflation. In the Fed's June meeting minutes showed Wednesday, right? Of course, no secret here. We were all, seeing this coming into the light. They had got to a place where they were trying to slow walk rate hikes with these little, very, very, infinitesimal 25 basis point rate hikes. And you're trying to fight literally 8% inflation with a quarter basis point. I mean, like, seriously? Like, are you just think we're that silly and we that naive, right? So I think, it began to be an echo cry around the citizenry, hitting up their public service members and the president and so forth. Like, wait, are you guys serious? Are you going to fight inflation with this level of, ridiculous rate hikes, right? Even though, no one really wants rate hikes, but the only way you're going to fight inflation, things that hurt people the most in their real-time spending in terms of fuel and food and energy, yeah, you may have to put a damper on demand. And the only way you can kill demand, right, is to raise interest rates, right? Make things a little bit more unobtainable in an instance where a lot of even the wholesalers or the distributors of these items as well, or these services or whatever, can begin to pare back some of that, price hike value of margin that, forcibly make people kind of have to take exactly what they're offering, right, at higher prices. So when you kill demand, that slows spending, that obviously flushes the system out of any excess. They have to drop prices. Basically what's happening with Target right now, Walmart and Target are having to reduce their inventory prices substantially a lot lower than what they would have been using to add more margin price rate values, or actually raising the prices on those goods, given the fact that the market would have been able to sustain it and deal with it longer than, before we pretty much just kind of crook, right, or crack, and then everything just bottom fell out the marketplace in terms of the consumer spending habits, right? Which showed recent with the Michigan consumer numbers that, we're definitely beginning to be a little bit more tight wallet, tight purse. We're not spending as much on discretionary items. We're buying necessities, more than average. So it says a lot about where we're going into the back half of the year, where people may be a little bit more frugal with their spending, and that's to be noted, right? Of course, why wouldn't you, right? All right. So the market's definitely pulling back a little bit now after it spiked up a little bit. Yeah, I'm getting alerts popping up in my ear right now, so that's why I'm speaking to it. So if you all watch the market, I'm pretty sure you're seeing all this volatility. It's up, down, sideways. It's all over the place, right? Typical markets, right? Got to get used to this stuff, right? So yes, those corrections. Corrections happen all the time. Yeah, that's exactly what's going on right now. It's definitely all over the place. And the markets are trying to again make sense of, where are we, right? Are we going to be in this low position where we're going to stay sideways? Somewhere in this channel at this point, we have a low of 362. Of course, we know that we do have the high at 480, right? But I would say, again, I think the intra-year high, I made this declaration before, the intra-year high, in my opinion, is around 462, right? 462 is my opinion of the intra-year high. Unless that changes, I will kind of keep that kind of, perch point up there until that, changes, right? So shout out again to, Jerome Powell, making it always, interesting to trade this marketplace, right? Given a lot of his, commentary and how he kind of colorizes the scenario that it's not as bad as it is, even though things like, okay, this is not great. But whatever, right? They got to do what they got to do, right? They have to do what they have to do to make this stuff make sense. Right? So again, as you see here on the board here, really quick here, right? And then my alert's just going off left and right, man. I tell you, this thing buzzes in my ear. headphones. It says, in discussing potential policy action at upcoming meetings, participants continue to anticipate that ongoing increase at the target range for the federal funds rate would be appropriate to achieve committee's objectives, right? There we go with that same, that right there's like the most popularized paragraph that the feds use more than anything, right? Right, this objectives committee, all this, whatever, like whatever. Right. So in particular, participants judge that an increase of 50 or 75 basis points would likely be appropriate at the next meeting. Now, when I said, earlier that this is the kind of, the ambiguity, right? This is where they have a little leeway, right? This is where Wall Street would take this and say, you know what? We were pricing in 75 based upon the future Fed fund rate, right? We've been watching that thing tick up more and more. I think it got up as high as like 85%, 75 to 85, then 90% in terms of people thinking all but certain that we would have at least a 75 bip rate hike, right? 75 basis points, right? Basically 3/4 worth, right? Now that the Feds are signaling that it may be possibly 50 or 75, right? That 50 bodes well to Wall Street. Why? Because in their mind, again, even though they know we need to fight inflation, but they say, well, they're softening in around the inflationary lane right now. Commodity prices are coming down a little bit in certain areas, right? We do have, softening in the oil market, as we saw oil pull back just recently. We have softening, of course, in some of the energy sectors, natty gas, things of that nature. They're pulling back a little bit. Wheat and food, on the wheat side of food side of things, it's pulling back a little bit on the agricultural side of things. With some of the hardest things that are, really, hurting consumers, right? Mm-hmm. But y'all know as well as I know, as, investors or basic traders, right? When you think about, when these certain, I guess, assets pull back, right? When they're somewhat in they kind of proverbial pullback, that somewhat doesn't necessarily tell the whole story. And whether or not, this whole movement to the upside and higher prices in gas and commodity prices, wheat and soybeans and rice, doesn't necessarily mean that it's over. Right? We understand this, assets like those pull back just like a stock like NVIDIA, Apple, or Facebook will pull back, or Meta, right? Whatever, right? And then they collect new buyers, and then up to the back to the upside they go, right? So it's not a moment to signal that all clear. However, Wall Street will again say, well, you know what? This is a sign that maybe inflation is peaking. Now, what's funny about this time around, they're very, very cognizant. They're very slow to say that commodity prices have peaked. Right, or inflation has peaked. Now they're using terminology more so like, well, okay, it's slowing down a little bit, right? It's starting to slow a little bit, right? And hence they should have been saying that the first time, right? But they just jumped out the window literally back in March, right? March and April, they were signaling that that we had possibly peaked. All this stuff is behind us. Again, all this FUD that people were saying is wrong, and turned out they were wrong, right? They were just a bad read in the marketplace. And because of that, a lot of investors who followed those, the likes of those TV analysts or whatever, they suffered at the hands of being able to buy these stocks at a higher price when they could have got them a lot cheaper, right? And that's just the nature of the business, right? You got to make sure that wherever you go to get information, or however you're able to interpret this stuff, you need to be able to really unpack it, right? I live to falsify all the different variables out there, because we use a lot of that kind of terminology over here, right? We like to go through the tea leaves, sift really, really, finally through the tea leaves and figure out and flush out, what are the problems or the variables that may be out there lingering that could put a, somewhat of a stop, on the, the push, or at least in this case, from the market economy having to deal with all this extra headwind information, right? Once that stuff kind of again moves through the system, then you can say, well, I can start kind of nibbling into the marketplace, comfortably, and not necessarily have to worry about, some bad academic data have, hiding around the corner, and then take them a block off, right? So, these are times we just want to be patient much as possible, and just again allow the talking heads to get through their campaign of crying and begging and whining and making excuses for this and for that, and whoever they're going to blame for the economy slowing and whatever, right? Once that stuff really gets out the way, we call that peak media, right? When you get to a point where all the peak media FUD is somewhat kind of priced into the market, or it's kind of starting to dissipate, I think then at those moments you can start focusing on putting together some different, better outlooks or strategies or thesis, if you will, start kind of nibbling to the marketplace, right? Because now, people won't be so, emotionally hinged on all this knee-jerk reaction commentary coming out of CNBC and Bloomberg and Fox Business, whomever, right? Wherever you get it from, it'll somewhat be quelled a little bit, right? So that's important, right? So that's very important. Right? So really quick, so it says at the conclusion of this previous meeting in June, right, on June 15th, the Federal Open Market Committee raised its benchmark rate by 0.75% to range of 1.5% to what? To 1.75%. So at this point, of course, we're sitting at about a 1.75% increase since the bottom, right? Since the very bottom when we were basically there at zero interest rates, right? Due to COVID, all this stuff, right? Now that we're kind of, starting to incrementally raise rates, in the grand scheme of things, of course, we're saying, a small value up against the real, I should say the the degradation of 8 or 9% inflation readout, but this is enough to somewhat fight inflation, like 1.75%. Are you kidding me? Like, are you kidding me? Right? And yet still they had the nerve to put in this little last paragraph here. It says, well, it was the largest Fed rate hike in single meeting, basically in a single meeting since 1994. As if they really doing people who have to go to the grocery store and pay these high prices or at the gas station, whatever, any favors. I mean, this is the lunacy of, again, when greedy people are in charge of, policy, and they refuse to kind of, again, really, really do what's necessary to help the American people, at least the Main Street side of things. It's like pulling teeth to get them to admit that, they're looking at it all wrong, literally, right? They're looking at it all wrong, right? They're too busy trying to protect asset, owners, if you will, and not necessarily as a bad thing because I'm an asset owner, right? Up and down the chain, right? However, I do realize on a blanket level, it makes it harder even for Main Street to be in a position to participate if they're always backpedaling because, bad policy, less money, less capital, less, equitable, employment levels, out there for, increasing their pay, whatever. Again, you need everything to kind of work in unison, is my point. If that's not there, then yeah, we're going to have problems, right? We're going to have problems, right? So it says, going forward here, it says the move caught some by surprise as the Fed had previously ruled out a 0.75% hike. Now, this is weird. Now, they can say that now in hindsight, but it was almost clear at the last meeting that, like, the ideal of them, ruling out 0.75, percent value, but rate hike was just, ludicrous, right? Now it's like, okay, that's you can just throw that out the window, right? You can't even use this sentence anymore because, the commodity prices signal something totally different when we got the CPI data readouts that came and just showed that inflation was still back on the upside swing, right? So yeah, like stop that, right? Stop that. Stop trying to juxtapose the fact that the Fed needs to do more to fight inflation with the idea that they're just kind of really weighing if they should do more, right? This is the kind of hyperbole I'm talking about. But anyway, all right. It says Fed Chairman Jerome Powell flagged incoming data showing inflation continuing to flirt with its 40-decade highs as the key drivers behind the central bank's decision, right? Again, it's not that they can't do anything to stop this, right? Unless they really get serious about really raising rates. Why? Because they can't print oil, they can't print wheat, they can't print iron ore out the ground, they can't print wood, they can't print those things that often affect the commodity markets that causes all this, demand value to kind of stay, somewhat elevated, even though it's kind of pulling back a little bit, truth be told, but it's not enough, right, to stop, the ideal of, at least inflation being stagnant up around 7 and 8% value, right? Even though we know it's much bigger than that because they don't really necessarily use the proper, inflationary measure tools to give you a true readout on inflation because they strip out energy and food, which is the biggest cost you incur, which is laughable that they do take those things out because they say, well, it's volatile. Well, it doesn't matter, volatile or not. This is still what I'm feeling at the gas pump, what I have to pay at the grocery store. How dare you take that out to try to make it be somewhat of a softer reading so you could be very, cavalier again and not wanting to raise rates, right? They're cavalier not wanting to raise rates, right? Which is weird, right? This is the game they play. Right? So going forward, it says the Fed's handiwork, some say has begun to have a desired impact. Yeah, whatever. Tightening just really started, guys. So like whatever. So QT just started. So we'll see as this goes forward if that really is the case. right? So it says tightening financial conditions have sapped aggregate demand and help cool the inflationary pressure. So this is that campaign where they're just going to talk the market down as opposed to actually implement policy to bring it down, right? They made it very clear in one of their last, I guess if you will, they were doing a news conference, I think a while back with some other central bankers. He was speaking about, of late, they've just been able to be very happy about the fact that they're talking about raising rates. And because of that, the bonds are already starting to kind of retreat, right? I mean, the bonds are being sold off, yields are going up, right? They're causing the market to kind of do the work of the Feds without the Feds actually doing any work, right? That's essentially what they've been doing. And to them, that's a win, right? Because like they really don't want to take money out the system. You can tell it's like they really are fighting to not want to, to not do this quantitative tightening as they should, right? Again, they got all this money on the balance sheet, right? Sitting up in there $9 trillion of literally, just printed money just out, literally. It's crazy when you think about it. But they still are having problems with pulling that money out of the system, at least enough to kind of kill demand, right? So, this is what happens when you put people in charge of your money, and they have a hard time in being really very, neutral and understanding the degree of what everybody's going through, not just those who are wealthy, but even the people who are on the bottom rung as well that need more help than usual. Right? But anyway, so it says 5-year inflation break-even rate, a key measure of inflation expectation over the next 5 years, fell to 2.502%. It's lowest since September 2021. Right. So again, they just utilizing these things to kind of figure out, where would they be if they could, consistently keep this damper on, the demand side of things, and we can kind of pull inflation back down towards their mandate, if you will, of 2%, which is kind of goofy because ain't no way the world inflation going down to 2% at this rate. Right? Housing market is next to fold, right? We already know that everybody keeping their eyes on the housing market because if that goes, so goes really and truly the bond market, right? Let's be, keep it 100. If the housing market goes, bonds are really going to be all over the place, right? Even though we had a 2 and a 10-year inversion today. We'll speak to that a little later, excuse me. But it's just signaling a lot of what we already know, right? It's signaling what we already know, right? So this kind of coming down a little bit. It says what I guess these are words of Jerome Powell. He's saying it's gotten harder, right? The pathways have gotten narrower to deliver a soft landing. So this idea of a soft landing, we've been debunked this, right? We actually went to their website, the Federal Reserve in New York, and pulled out information detailing that this was all of, a big smoke screen, right? It was window dressing. We call it window guidance. That's a technical term for it, actually, right? They were doing a lot of window guidance to kind of make people, it seemed as if they're going to have a big sale, a fire sale, but ultimately, they were not really planning on doing it, right? If they had anything to do with it, right? But anyway, right, that's just more window guidance, window dressing, right? But he says, nonetheless, that is our aim, and there are pathways to achieve that. Now, if he's still thinking that they're going to get this soft landing, right, good luck. Now, this was, him saying this last month. Of course, I'm not going to take him out of context here, but he was saying last month, he may think that it's obvious that they make him pull it off, right? But at this point, a month after the fact, he's like, bro, I'm not going to even waste my time saying that, it could be a soft landing. Because he's saying if he's changed up his talking point since then, to be exact, he definitely has done that. All right. So markets, particularly the bond market, have been pricing impending economic doom, which we're seeing that. Earlier this week, the yield of the 2-year Treasury bond briefly jumped over the yield of the 10-year. It actually happened today too. Right? It happened today as well, making an inversion in a key part of the yield that usually spells trouble on the horizon for the economy. Right? Again, no secret there. Just being students of the game, it matters because you need to understand how this market works so you don't find yourself in a bad position. Right? What I mean by that, you don't find yourself, again, really getting too comfortable and thinking that these people got it all together, because apparently they don't. Right? Apparently they do not have it all together. And they're signaling that they may somewhat, are in a position where they may can pull off a soft landing, but it's like almost for certain that I don't think it's gonna happen. Right? That's just from my vantage point. I just don't see it happening. right? So yeah, we'll let them talk and we'll just do the opposite, right? Right? We will do the opposite, right? What's going on over Brandon? We see you in the building. Peace, bound prophet over Brandon in the building, right? Our resident hospice in the house. What's going on, family? B Humble in the building. Our brother Sean in the building. Peace, bound prophet to you as well today, over. Shout out to brother Matthews in the house. I see him as well. Happy to have him in the building as well. Again, the family coming through today. Again, always blessed to have my peers, right? My equals, right? My brothers and sisters in arms, financial arms in the house, because we're doing this as a community as we should, right? It's not about, one particular scenario or other. It's everybody equal in this fight to get better and better ways to build the level of autonomy that we all should desire, right? As free thinking, beings of this rock called Earth, right? Right. So shout out to you all. If you are an entrepreneur, if you're sovereign in your own mind and own right, shout out to you, right? Entrepreneurs, go-getters, investors, and traders. You already know we're a special breed of people, right? People, have no clue exactly how, we spend a lot of time trying to crack this oyster, because we do want to be a part of the financial freedom fighters, right? The financial freedom fighters. That's a t-shirt moment, matter of fact. That's a t-shirt moment. Financial freedom fighters, right? Right? We always have our little t-shirt moment. But shout out to you all today again on this Way Back Wednesday. Happy to have y'all in the house as we go through this data here, right? As we go through this information, and that's just trying to figure out, exactly what are the Feds trying to signal going into the next meeting that we have coming up, basically around the middle of the end of this month. Again, if they're going to try to push this 50 basis point rate hikes now, man, look. Now, y'all know if they pull that trash, man, Wall Street is going to go crazy, right? They may be trying to stack the deck to do such a scenario, right? And they'll say, well, it's only, a quarter basis point from what we might have thought we should, could have did. It's still enough, right? It's still within the same timeline of what we were planning to do anyway, because we already had signaled, 25 in the very beginning, 50, then another 50, and then possibly another 50 or a quarter basis point. And then by September, we would kind of pause, right? That was the initial scenario before we got that last CPI data that came out, hotter than expected. That changed everything, right? It was all good just a week ago. Now they can say, okay, even if we do pull back, and lower it towards at least, 50 basis points, in July, and possibly August, we can do at least another 50 or a quarter. And by the time we do get to September, at most we could possibly signal doing like a quarter basis point, as opposed to doing nothing at all, which Wall Street exactly had banked on about a month or two ago. They was like, based by the time we hit September, the Feds they would have to stop raising rates, because at that point the economy should be in shambles, right? We should already be deep into the recessionary fog at that point, even though we're technically in one now, even though they would never come out and say it, but we know we're in one, right? Like, we know we're in a recession right now. We've been called that, right? But we'll play the game, right? We'll play the game. We'll let them kind of, be slow to, to being truthful, if you will. But we will still be planning in advance. That way, at least, we can protect our house, right? We can protect our financial houses by being ahead of their ignorance, right? By being ahead of their ability to be late, right? All the time, right? And that's just sad, because again, we've seen a lot of investors again who bought that first, lie that everything was all good, right? When people started to buy Apple again at around about 160, right? They was buying Tesla up again over 1,000, then 900 to 1,000. Right? They was buying Netflix up there near 300, 400, right? You couldn't make this stuff up, right? And then the bottom fell out the market again. Like RIP to those people, man. Sorry that they went through that, but RIP to them, right? Because apparently they didn't have nobody around them that loved them, right? People like, they mustn't have had nobody to love them, right? Or love on them, because they just all over the place. Right? Apparently they didn't have anybody that loved them that should have said, well, whoa, before you jump out that window, guys, let's think about this a little bit. Right? Let's go check the bonds, right? Let's go check the treasury yields. Let's go check, a lot of these commodity prices, see what's really going on here, right? Let's go, do a deep dive on a lot of these, forex currency pairs, and see exactly what these other nations are doing. If they're bigger allies of us, of ours, when it comes to import, export, if they're able to still produce at a level that we need or require. If that's a softening aspect there, that may, not necessarily do well for us, that currency up against ours. And that's just more problems that we're dealing with in terms of these kind of silent taxes, right? The same way people say inflation is a silent tax, right? Tariff, obviously, that's another one that's a big issue that's still actually acting on the table, right? We still have those tariffs in place that Trump put in place. And man, breaking news real quick. I have to stop talking real quick to show y'all this. The market is starting to rip now. Now we have that delayed effect. The market is starting to rip right now. I got to get over here real quick and show y'all this because again, I talked about 384 being a level that we were already headed to. Again, literally yesterday I was telling you guys 384, we're headed to 384, and it kind of seemed odd to some people. They're like, maybe not. But for the I guess maybe the ideal of the bottom that we had from a temporary perspective for 375 being holding into Friday. We got up to 381. Of course, we pulled back, Tuesday, of course, after the long 3-day weekend, and it fell, enough to kind of back test that point of support, if you will, even though we got in 373, because y'all know it's never the exact science. It's always going to be a little overshooting, spillage. But nonetheless, we call that as a nice little perfect point to kind of think about putting on a little risk in terms of call buying. And lo and behold, those calls are printing right now. Right? Those calls are printing right now. Just kind of give you an overview of what that looks like on the bigger picture here. We were saying, at around this 373, 374 area, right? Anywhere around here up towards, basically the VWAP, that's somewhat was a telltale signal of a short-term double bottom. Risk on appetite possibly coming in, but be very, again, prudent in your stop loss value, what you wouldn't want to lose if you take on that position. Again, it's not a financial advice. We do not give that here. We're going to offer opinions. But again, we saw a nice little moment to kind of play into some of this bullish drift sentiment, right? Given the fact that the market's still trying to, number one, keep itself farther away from the lows, right? The new lows that we have, the 52-week lows of this year, which is around 362. But also play back towards the ideal of maybe closing that, that final gap, right? We got one more gap that still needs to get filled, up towards that 399 area, right? 398. And then from there, we'll see where the market goes from there, right? Matter of fact, it's kind of backing out a little bit here. Just kind of give you an idea of what we're talking about here. So you see this gap back here, right? This gap right here, right? That's the last gap that Wall Street is definitely hoping they can fill here. Matter of fact, let me get my charts caught up here. Right, so you can still see it in real time. They're trying to, again, at least get back to that place. If they can get back towards 400, then they can decide whether or not this is enough to kind of, weigh their options if they can take this market a little bit more higher. As of now, though, we've crossed over the 20-day moving average here on the daily chart, right? This blue line here is the 20-day moving average, right? This is a bullish signal. Now, of course, that's still intraday. This is still intraday. It has to close above it. Y'all know the rules, right? You guys know the rules. We have to close above that of that 20-day moving average, right, on the daily chart. If that happens, then yes, we can possibly get potentially more drift to the upside, even though we still got to do a lot of dodging, a lot of economic data is still coming at the back of this week, right? We'd say that even though it's Wednesday, right? It's a short week. But we got big numbers coming out tomorrow to pay attention to, and we got big numbers coming out Friday for economic data that we need to pay attention to, right? So, yeah, we're not in the all clear yet, right? So, don't jump out the window too much, right? Do just enough that you feel like it's necessary for you to manage your risk, and then we'll let the chips fall as they may after that. But that's again, the market took a nice little turn, swung to the upside here. I saw my calls exploding here. I was like, man, looking over here to my left. To my right, and like, man, my money is shooting up over here. Okay, all right, let's go. All right, let's go. All right, so as of now, we're just gonna see where this thing going, where it's gonna close. Now, favorably, it'd be remiss even. But I doubt I'm not gonna even put that out there. Right, but yeah, on the daily chart, of course, the first hard line of resistance is gonna definitely come right around this 387 area. Right now, if they find some way to take what's like an hour and 30 minutes left for the market close today. If they find some way to get this market, at least up towards 385, right? Not saying it's gonna happen. If they can get the market up towards 385, then that'll be a great, again, launching pad to test that 387 potential tomorrow, right? So just something to think about. Again, we'll see though. But as of now, the market is fighting. It's trying to, take out at least the 20-day moving average. Bullish signal for a lot of the bullish, traders out there. Of course, they can utilize that as momentum. And from there, we'll see how the chips fall, right? We'll see where the chips fall from there. Right? So yeah, so that's it. So again, just kind of putting some context to it. Again, the day the Fed minutes definitely released some kind of tension for a lot of these Wall Streeters alike who were thinking that, you know, it could just be 100% outright 75 basis point rate hike. Now they're starting to feel a little different, possibly thinking like, okay, well, dang, shucks, maybe we could end up with, you know, only 50. If we only end up with 50, that'll do really well for tech, right? Tech will really rip. Like the QQQs will rip if they get, you know, anything less than more, you know, carnage for them, right? Because they're trying to navigate higher interest rate. You know, that cheap money is dried up, and they can't really, you know, rally on, you know, low interest rates any longer. They have to really improve, you know, their worth by putting out what good products and good services, right? You know, that's just what it is at this point, right? There's no kind of freebies out there at this point in the stock market. And so, yeah, everybody has to earn their own keep. Hence, a lot of these stocks that were just darling, budding, you know, up and coming, you know, spectacles, they've all faded or at least gone to zero, right? A lot of these SPACs, right, they've gone to zero, right? Or they just based all over the place doing nothing. A lot of these unicorn type stocks like DoorDash and Uber and Lyft and all that stuff, they just really gave up all their gains. Yeah, man, it's funny watching all these stocks when they were sitting up in there like DoorDash per se. I think they got up as high they're $200 some odd dollars. DoorDash was up near 200 some bucks, and now it's only like $56 a share. Let that marinate, right? Like this is the lunacy of the marketplace again. So again, as you all know, you know, when these things are happening and you say, okay, stock is pull back 30%, 40%, 50%. And the first thing that comes to your mind, like, this stock is cheap. And then you ask yourself, is it really cheap up against everything we're dealing with for the stock market? Higher interest rates, quantitative tightening, a rebalancing of a lot of potential overvalued high PE growth stocks that have yet to really produce a natural timeline of consistent growth and profit revenue. Are those stocks really attractive at a point in this market starting to kind of show a lot of weakness, where people will be very cautious about when they spend money. So you got to think about those things, right? You just can't jump out the window just because the stock pull back 30, 40%, right? This stock's even like beat down more than that, like 70%. Like that was like big high flying stocks that everybody was buying when the getting was good, like the Cathy Wood type of cadre. Right? Her whole portfolio is like, you know, in the trash right now, right? She was buying all those stocks way up there at this higher prices. So yeah, y'all might want to be cautious and just, you know, buy you some time and just be patient. Let the markets get cheap. Let it get, you know, flush out all this weekend stuff. And then you get excited, right? And then you get excited about getting the bag, right? That's just my opinion. Right? That's just my opinion. Right? So yeah, as of now, again, you see the market ripping up here. Again, hit all of our levels that we said. We told everybody that the market was going up towards 384.60. We told everyone yesterday the market was going up towards 384.60. What do you see right now? 384.60. Right? So shout out to you if you ringing the register right now on those calls if you bought them. Yesterday you swung into today. Of course, that was just our opinion. You did buy it. You know, of course, that responsibility lies on you. But you're definitely ringing the register right now. You are ringing the register right now. Right? Even though you kind of had a little softness in the morning, kind of, you know, caused you a little apprehension and fear, but you know, you sweated it out. Now you're reaping the benefits, right? All right. So shout out to you all today. Right, so that's what we're looking at as of now, guys. Again, the market here is, you know, digesting those Fed minutes. I can almost but be for certain that when I say that this pump right here is a lot of it has to do with the idea that 50 basis point, you know, cut is back on the table, right? And the fact that the Feds put it in there, the 50 or 75, it makes Wall Street feel a little bit more comfortable that it may get a little bit more wet, you know, less hike energy in the marketplace, which bodes well in terms of the PE values, right? The valuations are based upon these rate hikes in a lot of ways, right? And lesser values in regards to that gives them time to kind of work through their issues, you know, as a company, softening, you know, whatever the case. So that way, you know, it won't seem as if they're overvalued, right? That's basically what the interest rates measure up against their valuations in a lot of ways. So this bodes well for Wall Streeters who are saying, okay, yeah, maybe, you know, when earnings cycles kicked off, you know, another week and a half from now, and we begin to see these companies, you know, lowering their guidance, because it's almost for certain that we're gonna have a lot of stocks lowering their guidance, right? Make no mistake about it. It's gonna be a lot of stocks lowering their guidance, right? And you may start seeing people come out early, literally between today, the weekend, and next week, and they're gonna kind of try to come out and front run their earnings, right? They're gonna give guidance in advance, right? So that way, if the stock does pull back, it'll get it out, get it all out this system, get it out the way now. So by the time they do release, it won't be such a surprise. It'll be like, no, see, we was already telling you guys it's gonna be this and that and whatever. And yeah, so just make sure you guys are aware of that as well, right? Make sure you are aware of that as well. Right? So we're gonna make sure we talk about these things in a way where you don't forget. That's what we're supposed to be doing anyway as a community, reminding each other what to look for, right? What to look out for, right? So that way, again, we don't find ourselves, behind the 8 ball, right? It's just not, it's just not a good look, right, for our P&Ls, or at least for our investment thesis, right? So that's what we're looking at as now. So right now we got that rate hike, on idea on the table of 50 basis point or 75. It's interesting because I would definitely like to know what you guys think that's going to happen when it do come out, right? 50 or 75, right? So matter of fact, if you want, you might can type it in the back chat. If you think we're going to get a 50 or 75, if you want to, type it in the back chat. Maybe we'll come back and revisit this video once we do have that extra FOMC meeting, and we'll see exactly what the Feds did, right, or did not do, right, or did not do, right? But yeah, 50 basis points on the table. Whatever. But anyway, Fed Minutes Day, guys. Let's roll some of that bean footage, right? Let's roll some of that bean footage.
Fair to say you simply flooded the system with money. Yes, we did. That's another way to think about it. Fair to say you simply flooded the system with money. Yes, we did. That's another way to think about it. Fair to say you simply flooded the system with money. Yes, we did. That's another way to think about it.
That's another way to think about it. In the immortal words of Jerome Powell, right? I forgot his middle name. I should have said his whole full government name, right? Right? That's another way to think about it. You flood the system with a lot of money. Yeah, that's another way to think about it, right? Right. Again, he took good notes from what Ben Bernanke, right? Ben Bernanke is his idol, right? If I had to really look at the Fed governors going back, way back, before, we had a Paul Volcker, well, even say after Paul Volcker, I should say. Yeah, a lot of those guys been very wishy-washy, right? But yeah, I would say definitely Ben Bernanke is Jerome Powell's idol, because Ben Bernanke was print money under Obama like he was just a drunken sailor. Right? He made no mistake about it too. Like, I remember them old battles between him and Ron Paul. Like, y'all remember Ron Paul, right? The old school. And Ron Paul used to be digging it Ben Bernanke grill. Like, I mean, it was like brutal, like a wrestling match type. the way they were just kind of grappling with each other, through their commentary, dealing with the fact that, Ben Bernanke was taking a very cavalier approach to what, not necessarily trying to really balance the economy. They was really virtue signaling to a lot of what the Wall Street is, with a lot of the policies that was implemented at a time when American people like, dude, we need some help. And dude was like, man, look, we're trying to, make sure we keep Wall Street happy. I don't know what y'all talking about over there. But anyway, it was just interesting, looking back, now today, that those things are just, man, really great case studies to kind of go back and review and see exactly how these people have always had a problem with really, truly, in my opinion, doing the will of the citizenry, right? Meaning really getting a handle on, inflation and, the employment issues, things that really affect people on a day-to-day basis in terms of even, again, pay increases, right? Here we are in 2022, and they still have $7.25 as a federal minimum wage. 2022, you're sitting at $7.25 on federal minimum wage. Like, are you kidding me? Right? A bag of chicken costs $7 right now, I think. Right? Like, seriously, a bag of chicken costs about $7 for one chicken. Like, that's like for every hour you gotta work, at a job, you just made enough to buy one bag of chicken. Like, let that marinate for a moment, right? Put it in simplistic terms, right? Make it make sense, brother African poor. But jokers don't understand. Like, gallon of milk around about what, $3.50, $4 for a gallon, right? So you work a whole hour at $7.25 just to be able to afford, maybe 2 gallons of milk. You gave that employer a whole hour just so you can have, enough money to buy 2 gallons of milk. Like, bro, right? Like, bruh, it's that bad out there in the streets, right? Wall Street, man, I tell you what, it's brutal out there, right? Just like buddy out there dancing in the corner, the top right-hand corner right now. They out there playing around, right? And they got serious, right? They jumped on that real, economic treadmill. Jumped on that economic treadmill, and guess what? Jugger went flying, right? Jugger went to flying somewhere, right? So it's real in the field, guys. So again, just be really, ready to deal with this stuff when it all unfolds, because it's gonna happen.
Peace, power, and profit, everybody. Yeah, let's put a pin in it right there. This bothers me. This bothers me all the time. We are right now with the early voting. Your early voting. Your elected officials have come around. Hey, what can I do for the people? If you have not addressed this with your elected officials, you are wrong. I see many people are talking about different categories of information that they talk to their elected officials about. But I hardly ever see, case in point, they were doing debates and a conversation comes up about, putting food on the table, people having enough money, this, that, or whatever. But I never heard or any questions addressing the minimum wage. Like, make them talk about it. Make them say something. Like the scenario Brother African Emporium just gave on the chicken. If the price of chicken, let's look it up. Let's see where is it today. Price of chicken. Let's look it up. I say you can't make this stuff up. Let's see what Walmart talking about. Right? Man, and oh my God. So if a freshness guaranteed boneless chicken breast family pack 1.7 to 6.25 pounds is $15 and 2 $15.02, and the minimum wage an hour. You have to work 2 hours just to buy a pack of chicken. And what are we talking to our elected officials about again? This is right now in your face. I have to feed my family type of deal. Like, give them real, make them be accountable to some real information. I'm gonna put this on the screen at the same time. Let me get this link right here so I can put them up at the same time so you can see. Matter of fact, I could just leave it like that. Look at this drama. So it doesn't matter which way, how you want to look at it. Even Target, right? So you have to work 2 hours just to put a meal on your table. 2 hours just to put a meal on your table at dinner when your kids come home from school. 2 whole hours. This is what you need to be talking to your elected officials about. Your governors that's running out there, and they're running out there and on their platform and say, "Oh, we're gonna make it better for the American people. We're working on this thing." No, can you work on that money that comes? If you can write checks for everything else, you could. It's almost like they're scared to regulate the private industry and get them to raise rates. We did this before, African Emporium and I. Let's see, historical minimum wage. We would look this up, and we would look to see the effective dates of when minimum wage rates, what were the rates over time. Make them talk about this stuff. The history of federal minimum wage rates under the Fair Labor Standards Act from 1938 to 2009. Look at this. This is crazy. Let's bring it up a little bit. Let's bring it home. I know when my first job, I think, was in 96. $4.75 an hour. I thought I was doing something. I really did. I really did. I thought I was doing something, honey. Till you start to learn. Look at this. So when you start talking about, who's doing what, that's why they say they're the same. Both sides is the same. Because if you're not increasing this, and we just showed you 2009, 13 years ago. You know how much has changed in 13 years? I bet if you did a historical comparison of your household expenses, and we're not even talking about things that you just readily, purchase are an expense. I'm talking about the necessity, utilities, transportation, your home expense, your mortgage, and all that great stuff, right? So that right there, I promise you, it has gone up from 2009 to now. Yeah, you felt that, because in 2009, where was I? Okay, I was on Fort Jackson. 2009 to 2022, Yeah, a lot has changed. And in many cases, I know here in Carolina, some people paychecks has not moved. I honestly don't know how you guys make it. I really don't. I be asking myself like, wow, I don't know how some people are making it at all, especially if you want fixed income, you make it 12,000, 14,000 a year. I mean, the only thing it's probably saving you is the fact of some government assistance for food. I don't know. I don't know, y'all. Well, there you have it. Let me go back. And what's crazy is, but African Emporium, this video is from August, I think. But look how practical it still is today.
It is definitely going to happen. Hey, what's going on over Sunday? I want to make sure I overlook you guys. Know I'm just going in a little bit. Hey, how's your day, man? I see you in the building.
I'm doing lovely. I'm over here listening, enjoying. I love the stock talk. You know, whether I'm listening to it or I'm talking that talk, I love hearing it.
I'm with you, man. I tell you what, we need that reinforcement, man. It's great because, and we think about it, imagine we had a play-by-play, at our aspect of understanding the marketplace in terms of, people can come on and kind of speak a real, clean truth about what they see in the marketplace, right? As opposed to all this kind of, extra you get from a CNBC, right? We had play-by-play on our side. It would be so awesome, right? Right? Just like you look at like a football player who made a great catch or something, and someone come back to a play-by-play, right, in the stock market. Yeah, ooh, man, that last counter right there was just devastating. Boy, that's gonna hurt in the morning. It'd be something like that. Like, yeah.
Yeah, real talk is it's almost like if you're watching a sports like a game or something. You know what I'm saying? Right. Like when you get ready for the pre-market, then when the market opens, it's like the game starts. You know what I'm saying?
Facts, man. And it's weird too because we're trading this stuff in real time, right? We're all over the place, right? We try to make sure we stay solid and everything looks good or whatever. And yeah, when them candles come out of nowhere, man, just throw your whole game plan into a flux. You're like, God, no, bro, where this candle came from? Right? You can see the look on our faces. That would be something very, right? We might need to look into that maybe one day, right? See if we can come up with some kind of way to do just that, possibly, right? So who knows, right?
I think one thing.
You go ahead.
I was gonna say, I think one thing about it is that we have to get people out of thinking that this is just a quick money scheme. Like instead of actual investment where it takes, where it's over time, you make money because there's a lot of money to be made if you do it right. And it's just on the page. You have to have patience and take your time.
Facts, bro. And of course, y'all know we are major and big proponents of education, right? Right, over entertainment, right? We're major proponents of what? Education over entertainment, because a lot of people will get caught up in the entertainment of investing, and it will make it to them it would seem as if it's like it's a kind of it's a coin flip, right? Or some would say a gamble, right? And that's not what we're about over here, right? We've never been about that. We never will be about that, because this is a marathon, not a sprint reality that we're trying to incubate, right? We want this to be something that we can look back 20, 30, 40, 50 years from now, and that just be the beginning, because guess what? We got children, right? Or family members want to pass down this stuff to, right? We want this stuff to keep working well into our demise. And so from there, the education has to take root, and the majority of people who think it's, anything except understanding it's a strategy and it's thesis involved, putting together thesis involved. There's a lot of fundamental information that needs to be understood before you even look at the technicals of this. Understanding the nature of what markets are trying to present to you, right? The ideal of a company being around more than 5 years, 10 years, 20 years. Could you see well into the future? And if so, do you think they will have the level of potential growth, right? Or from a compound annuity growth, rate value, to say that this company is worthy of me investing in, well into the future. Right? Since we can always look back and say, man, imagine if our parents bought us shares of Microsoft and Apple when we were little kids. Right? It'll be game over, right? They bought y'all shares of Amazon, whatever, right? Depending on how old some of y'all, but I guess in my time it would have been like Apple or Microsoft, possibly some of them type, right? Right? But nonetheless, Imagine where you'll be today if they bought you shares at least for your first 5 years of birth, they bought you their shares of Microsoft. And then after that, they start buying toys and all the other goofy stuff, right? But again, just the idea of that. Now, some of you guys got kids now. Now, imagine if y'all start doing that right now. I'll wait.
You can put it in the mailbox.
5, 10, 15, 18 years from now.
I just wanted to make sure
Okay.
Says open immediately. So I thought it was a little important.
So
Okay, yeah, put it in the mailbox. I'll come get it.
Looking into
Thanks.
things in a way where,
You're welcome.
it'll hold us accountable for the ideal that there are a lot of things that we might have wanted if we had that chance as younger people that we need to start implementing for our younger generation. Because again, from that energy alone, you're not dealing with a gamble because you got to be willing to put that money away the same way you're putting a savings account that collects dust and let it work, right? You have to put that money away and just let it work. Now that's discipline, right? That's discipline on a whole new different level. Some people are not built like that quite yet, and maybe they need to go through flushing out a lot of their way. Their inconsistencies before they kind of get to that place. But nonetheless, you stay on that path, right? Don't give up on yourself, right? Don't give up on being in a position where you can control and own assets that work for you as opposed to you having to work for it, right? So that's what this is all about. So Obasan, you hit the nail on the head. You're 100% right and exact, bro. We got to get to a place where we start realizing that, if you're looking for the quick buck, if you're not ready to be able to even handle that kind of level of the marketplace as a day trader, don't jump out that window, right? You don't want to be like the guy up in my little avatar picture up in the right-hand corner, right? That's what day traders that come in to understand how this market works. They out there dance around, crip walking, they jump out there in the real market, and they get what? They get swiped up. They get swiped up out there, right? It's real out here, right? It's definitely real out here. So we want to make sure we bring and pay homage to that and bring truth to power to the forefront here because we are definitely with the education over here, right? We're about that life when it comes to the education of understanding the markets, right? And that separates a lot of people from, thinking that you can just come get a pump signal and just, I'm good. Just give me a pump signal, give me a stock, give me a ticker, bro, and let me just go what? Let me go trade it, right? You will not get that on this channel here, right? We're not even about that life, right? We're about really trying to curate money, right? We want base hits over home runs, right? If the home run happen to come, so be it. But, we're definitely all about the base hits, right? We want to be consistent and figuring out how to way to trap money, right? That comes from being, again, a really good curator of information, data, and the way you interpret it. When you understand that, then you're in a position where you can maneuver in this market. Because there's so many things that people have yet to even experience. A lot of those traders are getting a crash course on it right now. A lot of those guys came into the market because of COVID, who didn't understand the historical nature of what markets did over time, how they move through ebb and flow cycles, boom and bust cycles, right? Peak to trough trades, whatever. Those guys getting a hard dose of reality right now because, man, they were buying at the top of a lot of these stocks. Like people were buying GameStop at $400 a share. They were buying AMC at $70 a share. Let that marinate for a moment. They were buying Netflix at $600, and then $500, and then $400, and then $300, and then $200. Let that marinate for a moment. Moment of silence for all that wasted money. Because they thought the body dip culture had legs and roots, down to the substrata, and found out that thing was shallow as the Fed's money printer, right? And when it's far the wrong money printer, that was it. And now they're getting a hard dose of reality where they didn't understand the nature of how dollar cost averaging works, right? How to play, the ideal of PE ratios and forward PEs and market cap values based upon competition, interest rates and all things like that. They just overlooked all that stuff. Like, bro, we don't need all that. Just give me a ticker. Right? Give me a ticker, bro. Throw me a ticker. Throw me a stock. Right? Now they, about that, right? It's about that, right? About that. It was all good just a week ago. Right? So yeah, it's important, guys. You guys realize this stuff. And again, for what it's worth, you guys understand, of course. I know I'm dealing with people who are very sharp here. And we're still in a mode of building, right? We're in a mode of learning, right? You never get to a place in this where you know it all. If you do, you're in trouble, right? Warren Buffett is still learning, right? Warren Buffett is still learning. Like, how dare you? Now, he may not buy Bitcoin, right? Shout out to my Bitcoin people out there. He may not buy back Bitcoin, him or Charlie Munger, but they could definitely give you some good macro information, historically, and still put in some good investments still to this day, right? And hey, for what it's worth, again, as they say, game recognized game, right? Game recognized game. So it's to each his own, right? There's a level out there or a market for anybody in the stock market, right? There's so many different industries, so many different opportunities out there. Of course, in my mind is just make sure it's making money, right? If you're the only one like it and no one wants to buy it, then that's a bad investment. Unless you really see something in the future, see into the future and see that this stock is going to take off well beyond everybody else. Yeah, you can't be the only one that like it, right? You need other people to be comfortable in wanting to invest in it as well, right? Speaking to the investors out there, right? That's the point. And that's important, right? That's important. So just make sure you guys understand that too, right? So again, so shout out to Jerome Powell again. He's the star today. Again, right? We're talking about, him, carrying that casket, right? Him and Janet Yellen and, and Putin and Biden, right? Everybody, right? Shout out to them right now, right? Shout out to, just this ideal of what this looks like going forward in 2022. Like, these are the key major players of 2022 right here on your screen, folks, ladies and gentlemen. You see, right, the culprits here. These are the culprits, right? Now it's interesting because the guy in the very back, all the problems that that happened in the front of the casket, been blamed on him. Right? Everything that happened in the front of the casket been blamed on the guy in the very, very back there, right? But the first 3 people you see caused all this mess more than anything. Right? It's interesting, right? And going forward, we're going to be able to kind of really track what this is going to look like on the back end of the year, when it becomes apparent that, this was way more bigger than what people thought it was, right? They just had really got ahead of themselves. They got greedy. They thought they could just keep, pumping these stimulus packages through the system, not necessarily the ones who went to the people, but these mega, infrastructure bills and mega, build back this and build back that and all this stuff at a point where the market was just not ready for it. It was just too soon. It was too soon. And see, that's the part where you would think these people are smart enough to realize that, but they were not. So yeah, they're in trouble. Right? They are in trouble today. Right? So yeah, good luck. As one would say, good luck. Right? Good luck. Right? If you just put all your chips or bet on the administration the way that you did, I'm sorry, but yeah, you might want to hit them up and say, you might need a refund. Right? You might need a refund. Right. So as you see right now, we got Tesla still trying to battle to overtake that 700 as well. Been watching Tesla, of course, given the fact that they had deliveries over the weekend. I'm sure some of you guys already saw the news with that. We were posting on that. They came in around about 254,000 cars delivered. 258 were produced. Of course, they needed something around about 250. That would be somewhat like the baseline that they were a lot of Wall Street looking for, even though some had like 260, some even had like 280,000 cars. But for me, I think that was notable enough, given the fact that their factories in Shanghai were shut down because of the COVID stuff. They got that little party, right? They got that late party by Wall Street to say, we'll give you the benefit of the doubt. Right? Them getting the benefit of the doubt really, was able to keep the stock from really going any lower than filling that gap. Now, interesting enough, because I said to myself, what? I would like to buy Tesla ahead of those delivery numbers. But the only thing that caused me reservation was the fact that we still had not closed that 650 gap. And weirdly so, we got a chance to fill that gap literally the other day. And you know what? I was busy and I missed my buy opportunity. Now, weirdly so, I should already had that limit order sitting there, right? I was gonna buy it through the option, right? So you gotta make sure your options price value, what that looks like, would be kind of somewhat in that area if you put it on from a limit perspective. And I timed it so wrong, but I missed the opportunity to buy Tesla at 650 to close that gap. And as you can see here, we came all the way down and hit 649, 648 change. Right? We closed this gap, right? Let's go to the daily chart here. Right? See this gap right here? We finally closed that gap. That was a major gap, at least in the short-term aspect of Tesla that people wanted to see get closed. Now, it's still early, right? Some would say, yeah, bro, but it's still early. You may not was, able to catch that gap, at least get, somewhat down there in that area. but yeah, it's anything I think at $700 or better, it's still good. Well, I say, well, you know what? They still got earnings coming up. They got a lot of things still in the pipeline that we got to deal with in terms of these rate hikes. I'm thinking about it from a trade perspective. I want 650 back up towards 700 plus, right? So yeah, at least towards 750, right? I'm playing back, up this triangle, so to speak, right? And so we double bottom here, and now we kind of somewhat bouncing here in between purgatory, right? At around 700, potentially, hopefully that we can get towards 750. A lot of people starting to buy a lot of calls for 750 strike price. Yeah, but I don't want to be caught up in the middle here, right? I just missed my window. But hey, we'll see, right? But shout out to people who was able to catch that Tesla trade, because I literally said, hey, that 750 bottom, that gap fill, that may be a great area to be, thinking about buying. Right? I just had my limit order wrong. I was like, God, boy, that one there just messed me up, because we just rallied, right? The back end of that other day, where the market bounced off of 640, especially in Tesla, ran all the way up towards 690 something. I was just like, oh, all that money, he wasn't ready, right? Yeah, I just had to do that one. It happens. Right? It happens. So outside of that, guys, you guys looking at anything in the back chat, man? Y'all have any stocks that y'all might be wanting to trade? Any stocks that y'all looking at that you want to talk about? Of course, y'all know this is an open forum. You're definitely welcome to share it. Also, if you want to come on the panel, guys, if you have a little time, I have a little time here, about 20, 30 minutes before I get off here. Got a lot of errands to still take care of here. If you want to come on the panel, the link is out there as well. Matter of fact, let me post it again. All right, some of you guys probably did. I get it. It is way back Wednesday, right? They're trying to get it in. But if you do want to come onto the panel, the link there is in the back chat. We appreciate you. We appreciate your view. We appreciate your, what you bring to this channel, this community, and what it's all about. What about you, Sunday? You have any stocks you might be looking at today? I know you posted that ZOM the other day. It actually rallied like I thought too a little bit. It got up towards 25 cents a change. I'm pretty sure you saw it.
Yeah, my goal on that is actually to get 10,000 of them. So I started off with just 100, and so I'm small trading it like every few days or whatever, or every so often. And my goal is to build up about 10,000 by next year. It's set to be estimated at over $1 by the end of 2023, but you know how that go. I ended up following it from Kathy Woods. I was checking out like some of the stuff that she started investing in after they started going down on the long term. So it was just something that was cheap, and if it was big time investments going on in it, plus the market cap was kind of high for it to be that cheap, I just trying it out.
No, you're 100% right. Is that again? And we were looking at it yesterday, guys, when we talked about this stock here. It was rough around about 22 cents a change. I was like, it's above that 20-day moving average. It's kind of catching a little bullish momentum here. At the back end of this, little pullback of late. You kind of established a new bottom. As of now, that is your what you call your demand zone, if you will, until something changes at around that even number of 20 cents. And they fought hard. You got a nice bullish engulfing candle here that really catapulted the stock and get it back above 20 moving average, and it literally closed right above it. Right? So somebody want this thing to close above that 20-day moving average, right? Which denotes what? Still a bullish sentiment. Second to that would be what? And this is on the hourly chart, mind you. Second to that would be what? Being able to take out that 200-day moving average, which is a yellow line here. And they did that, right? They did that, right? Definitely did that, right? And now they're up here above the 20 moving average here. And so this stock, trying to, again, establish a new purse point right now. You're going to run into some resistance here clearly around this 25.7, near 26, right? Which to be noted, because we got some chatter area there. Or people might be back holding way back over here, right? That may just want to get out the stock after they kind of pull back so low, and that's fine, right? That's the whole idea when you flush people out the market based upon, their, bad timing, if you will. When you take those guys out, basically buy a lot of their shares that they dumping, and if the stock can hold up, then yeah, you can may go test some of these previous areas of interest back over here, right? These stocks back around this area, right around this area here, right? So that'll be interesting to kind of utilize this stock, this stock and this chart as a way to see exactly what the areas of interest may be going forward. If you can get above 26 cents, then yeah, up towards 28, may not be such a hard push. And like he said, it's kind of given the extent where the stock came from. Yeah, it's some meat on this bone, right? That making come into fruition, right? And you see, we got some little signs up here. We put some stuff in this fan, talking about the lower highs of it, right? But getting back up towards 40 cents, 30 cents, all that area, yeah, potentially, potential might be some action in there. But like you said, you got to deal with the idea that it's cheap. You got to deal with the fact that, given the fact that the market kind of punished it at a point where a lot of other stocks were coming down to, you got some notable people talking about it, like a Cathy Woods, whomever. It may just bode well for the stock at some point to try to get it back up towards that dollar range, right? Which it fell from its grace, right? It fell from grace going back February 2021, and then again on March 21. And so yeah.
Oh, another thing, and not being on no cheap guy stuff, but that stock actually doesn't hit no lower than I think the lowest it got was like 16 cents or something like that, but it averages out to where it doesn't get no lower than about 19 or 20. And so with that being said, and that's as the market's bottoming right now. So with that being said, it's just like if I get the 10,000, this is why my goal was on that. Every time it goes up a penny, it's $100. So it can keep evening out every day like this all day. But if I got 10,000, I'm making an easy extra. You get what I'm saying?
Oh, definitely.
Yeah.
Man, of course, you didn't know me way back in the day, but man, I used to tear these little penny stocks up, right? Man, we had one. My brother Rich Boy, he come from my old little cruise a little bit back in the days on South Discord and all the other crews. And man, we used to have our little moment trying to find these little stocks like that. And I had one that was a massive little, it was just all over the place. But this company called DCTH, Delcal Therapeutics or something like that, right? They deal with cancer, right? Liver to cancer. And they had really good technology, right? But the management, the C-suite sucked, right? The C-suite sucked for that company. Like they had all this great technology in terms of dealing with cancer, but really bad management, right? And that's the worst thing that you have to deal with if you invest in a company that has a really good product or service or technology or science, and you have bad management at the forefront of that, they can mess up a really good momentum, right? And we dealt with that, with that company DCTH. And I was like, man, this. But anyway, I was at the kitchen on the moment when it kind of really pulled back on a hard, it kind of went through its flux and got beat up, and the stock got down low like 4 cents, right? I was loading the boat around 4 cents up to 7 cents, and I had kind of put a projection out that the stock was going back up towards like 20, 30 cents, just like you were doing. You saying if I just buy a lot of shares, and at some point every penny it goes up, you'll make a certain amount. I cleaned the clock on that stock, right? Ended up hit my goal, even though I wanted to go higher, beyond what I had chose, but it just wasn't in the cards, man. The management was just sucking, right? They just messed up a really good stock. So that happens, but for the most part, as you see, even with this company here, right? Again, anything above this 200-day moving average going back on December the 15th, 2020, that's your your hard line, right? Your hard stop, in my opinion. If you fall below that area there, because guess what? If you look at that area there, there's a flat top breakout at that point. So you can see right here, that's a flat top breakout there. Right? You have a lot of accumulation, consolidation there, and it broke out, right? Now, coming back to this place here, if you lose that line, meaning if those guys, end up selling, if they still in it, but if they sell, right, who are, old school holders in this, that can be problematic for the stock, right? You can easily flush down towards 14, from 14 back down towards maybe 11, then from there, 10, 9, maybe lower, right? But as, you were kind of denoting to over Sunday that, there are, a couple of big name people trying to look at this stock as well, the technology that they have or science that they have, potentially may be worthy enough for them to, take some little small position on. And y'all can check that stuff by going to maybe, their financial website to kind of see, who are the insiders that may be buying it, the institutional buyers. That bodes well for a cheap stock, because you need big money to, like your vision, right? Your goal, right? If that's the case, then yeah, you may have something on your hand to play with here. If you just get, like I say, 30 cents, 40 cents, 50 cents, that's a nice bag, right? That's a nice bag, Right? So Equilibrium definitely puts this thing around by 50 cents here, giving this kind of same way here, flat top breakdown, right? It's supposed to flat top break out almost. It just kind of stayed sideways in a tight range, and then it broke down. Right? So get back up there would be like really, really good place in this stock, right? So hope it does for you, right? I hope it, it goes well beyond what you really want. And from there we'll try to, see what the future holds for companies like Zomatic and many other little small cap stocks. Because the IWM, which is the Russell that's being tracked by, right? You really want to keep your eye on those, because I think small cap will be the first thing to tell you that when we kind of make that hard turn, right? With all the recession fears, inflation fears, all that stuff. When the small cap stocks start to really, really rally, right? Meaning the IWM as a whole, of course, then you can say, maybe you start looking at tech a little bit more different, and some of the other stocks, right? That's just from where I sit, right? In my opinion, right? Yes, so shout out to that, man. Shout out to that. It's going to pop and drop like last time, brother Kevin. What's going on, brother? Everything. Shout out to you as well. Happy to have you in the building, right? I got everybody, slide through a little bit. Let me get Sonny back in here. He kind of went out a little bit. You there, Sonny?
Yeah, I'm here.
I know you probably got dealing with, signals and all that, signal areas, but yeah, so that's my take on it too. So you already got a good plan. I'm pretty sure you got it, you're going to manage it properly, and then hope everything work out too.
Yeah, I finally did a trade where I wasn't waiting too long. Boy, you had to get in and out today, boy.
What you got on the blotter, man? What you did today, Ober?
I did my income in on the video.
Oh, you hit the video. Let's go look at the video.
I got in, and soon as the little meeting, I didn't even listen to it. I was just watching the chart. I said,
right.
Probably a little one contract to see what it do. And I seen it hit up there one time, and I said, I'm going to buy it on the pool.
Nice.
Okay.
Oh, man, look at it right here. And I looked this up with somebody maybe, I want to say maybe a few days ago, whatever. Somebody asked about the video over the weekend, the 3-day. But yeah, like I say, at the bottom of the regression band here on the hourly chart, clearly you can see what we said, a little bottom effect there. It's just kind of riding the wave of the cues, right? And all that. And you had a 20-day breach as well. That's very important, because that's a buy signal, right? Anytime you cross over a major moving average, you have to kind of lower below it. As you see it kind of tighten it down, and around this 20-day average, kind of stop the bleed. RSI hit over oversold. It was at a 30 RSI. A recipe for a really good swing trade, right? If nothing else, right? A nice little swing trade. Really, really set the environment for a little risk on in that stock. And if you caught it, of course, like what you're speaking to, I know you're gonna speak more in depth on it, bro. I know you were happy for that.
I got in and out of that thing, man. That thing, I see that. I said, if it pulled back, they play the games at first.
Yeah.
Think it's gonna go down. And I had my little level set. I said, man, if they hold 149, 150, I'm gonna get in and I'm gonna get out at 152. I ended up holding the 152.50 on my little contract. So I got me a little 25% real quick, and I was out of there. I'm good. Just get back into the feel of understanding how fast this thing, because if you hold it, that time can get you. I'm kind of realizing, but
well, again, these are weekly, so you're not like you're fighting against like the SPY would be on day to day. So yeah, but nonetheless, like I said, you got to be cognizant of understanding how to utilize these moving averages and price action and momentum values to your favor too. Why? Because we always say a bird in hand beat one in the bush, but I'm always gonna say trust your trust your indicators, right? Trust your levels, because if there's more meat on that bone and you're not necessarily really hard pressed, think about being fleshed out or something, get paid, right? Because right now, you look at this chart here on the video on the hourly chart, this thing got bullish drip all over, right? That first hour, that was just to flush out some of this euphoria from the previous day, and it still didn't really break down no lower than a key point of support at around this 148 area. It just went back to an old point of resistance in the past, right here.
What I had my levels. I was really never dropped one of the lower last hour. yesterday. It kind of like held in that range and stuff. I wish I should have.
Well, it went a little bit lower because if you're looking at here on my chart here, see right here, it went a little bit lower, right? Because keep in mind, this is your low today, right? We got down as much like 147.93, right? Yesterday we had that low around about 148, or about a dollar. But if you, again, even in that perspective, right? Because you say to yourself, if we're playing the game of what, trend value, right? Even if we use the wicks, right? We use the wicks over the body of the candle. You still had a good little range here. And we're saying, we're going to play the game of what? Lower highs, right? Or higher low value. Your trending was still intact. Why?
I was playing the last hour. The last hour. That was my level yesterday. The last hour.
Right, that's what I'm saying. This candle right here. You can see it. Can you see my chart here? You can see this guy right here. That's what I was pointing to. This guy right here.
Yeah, what's
draw the line.
The last hour, 147.
Yeah,
175, something like that.
It was like you had a low of 148.77 and a high of 149.71. That was the last hour of yesterday for the video. You might have looked at the one that's previous before, because this one here is at around somewhat close at 147 here. But nonetheless, it was still in the uptrend. Because look right here, right? You got that bullish arc, right? We talked about the arc patterns as well. How to watch that kind of drifted up to the upside, kind of stabilized, build, find a couple new buyers, and of course it spilled into today, and then it ripped and went higher today, right? So it had that continuation phase because, if you think about it from this angle, this was a really good bottom trade. Because look at that, you bottom out on the RSI and the middle regression band, you get that support in the L, and after that you had a big bullish engulfing candle here, which denoted, the bulls are back in town. If it's just for a day, right? The bulls were definitely back in town here. And this was just a great little money trade here. Play into such a strong stock like a video, because the semiconductor was getting hit across the head. The one stock that made me see this as a potential good trade today, yesterday as well, even though I didn't trade it, was what? MU broke out yesterday, right? Micron, right? We was watching Micron. Micron broke out, right? So AMD cut a little big, AMD all over the place, right? I really like AMD too. So I told everybody, anytime AMD gets around about $70 a share, me personally, I don't have a problem living into AMD. But I do feel like it's going to be one of the major, chip, houses, in the future, possibly even overtaking Intel. I think they have the potential to do it, or potentially do it. So NVIDIA, of course, being a top dog, in a lot of ways, if you watch it, I know you like NVIDIA too, over there. Man, you should have caught this bottom, man. You'd have caught this bottom here. Tuesday, when we hit the bottom of the integration band, when the NU was running and the SOX was up, Philly Semiconductor ETF, man, this was a great little trade.
I don't really give myself enough time. I try to get it last week, losing a few dollars, so I didn't give myself like, stop right there. I said, no, I need to give myself like 2 weeks to swing it when it got to that 145. This it looked like it's going to go high.
Well, it's definitely going high. It was still bullish. That's what I said. Man, you just saw if you saw it cross over that 20-day moving average here, that should have been your signal there. Because look, and you back tested, of course, on the hourly chart here. I saw, that would have been enough for me. Right? Just me personally going, but yeah, I was like, man, look, until they shake me out or they come back towards this flat line here. That's basically what they're doing. Look at the 20 moving average here. It's starting to flatten out here. You see exactly what 20 moving average doing. We're doing the work that you want to see. And now it's turning up, curling up to the upside. Right? Like, that's, bro. Yeah, you went half on the baby with that one. You'd have been half on the baby.
Sometimes you want to hold. Right now.
I get it. Now you're right. You did the right thing, because I'm a big proponent of what? Always be closing, right? Y'all know we talk about that a lot. Right? This is a market where you want to always be closing.
That was in my mind the whole day. If I'm in any trade,
but I gotta say, but you still gotta trust your moving averages. You still gotta trust the bullish drip. You gotta trust the price action, because that also denotes that you came in with a strategy, a plan. Right now, you may have gotten what you feel like you wanted from it. Who knows, right? Of course, that's within what you probably saw as opportunity. But I will say this, just given the fact that when we talk about measuring trend value, right? What do succession values of candles look like? What is the extent of the price action, right? What do we come from, right? Previously, right? And you got an RSI that literally bottomed out, for about 2 days, right? Or at least a day and a half, or 4 days. It was at the bottom the entire day, bottomed out. And so stop like the video man, come on, this is like a breadwinner here, right? The video's a breadwinner. Yeah. So this process, bro, I get it, and you learn. But I will say this, just stick to the ideal of being very, being vigilant in terms of how you respect the value of what, the indicators and, the price action, in tandem to that. And then working in unison, as you see here, look at her, right? It's right now, you see that round the bottom, turns value of volume like this here, and you peak value, then you kind of same thing. So this is just a complete repeat of yesterday. Look at the volume here. Look at all that green right here. Now, of course, you this hindsight to the market moving real time now, but the way it closed even yesterday showed you that they had what? Bullish energy, right? A bullish sentiment. Now, open up red, of course, everything is all over the place, right? You had a nice little run off the lows yesterday. It just pulled it back a little bit, but it didn't pull back enough substantial kind of what plus we got. They didn't take out this counter. They didn't take out these guys right here, right? This guy right here, these people right here, they were safe, right? So anything at that point ought to set me a stop at around about this what is the line at right here? 147.50. Right?
Listen, that's why I had my numbers at. That's why I said, man, listen, man, you agree with what I said, man, listen. I should say it because I don't think that stuck me out. Keep going, but I'm like, man, he was in my mind all day because it was sweet yesterday. With some factual stuff going on. Even though like I don't feel pain.
No, you shouldn't. Yeah, there you go. Go ahead, be one push.
I know what it would be like long. Like right now, it might be strong. But then in the morning, you wake up, it's down 4 hours.
Right. This is the ABC market. You're 100% right, over. And that's why I say, even though, but again, from an intraday perspective, now you may not want to swing it, but your dogs are doing it. You can show what every scale, every bone off that fish back, right? Nothing else, right? Because that's what we're trying to the opportunity, right? Probably give you, and some of these stocks that kind of moving and that's powered by their own individual, issues in-house. But if you get that broader market, the drip and the stocks is breaking out like semiconductor ETFs, all this stuff, and the Qs are running too. That's all but a signal that you know even though we kind of broke out early, pull back, sputter before we got into what some of these sections we have to wait for today. Like up into the 10 minutes, stock is still trying to show you bullish energy, right? And all this is the old school continuation. You get oversold literally on the hourly chart, and now you're fighting back into some of that inside some of this this oversold territory, get back to the major new narrative. And the next levels begin to be very easy to read. You've got areas of entry up towards 155, and you've got nice little gaps towards 157, right? So most people are trying to potentially play into that. Will they be successful? That's debated, right? Debated. But as of now, this bottom low fishing moment here from 140, now you have the 150, that's $12, right? $12, right? And 8 hours worth of trading. $12 and 8 hours worth of trading, meaning 4 hours and whatever, right? Inside of the value of the drift value in this case. And when we kind of broke that, I shouldn't say that. I shouldn't say more than that, 12 plus hours. But nonetheless, you had 2 days worth of a signaling kind of make you feel comfortable to break out. Right? Given the fact that it did not necessarily roll over, after it closed yesterday, it closed right up near the 20 barrel, right? So it fought to get up there. The next day, it opened up, flushed out some of those old people who took profit and held really well above 148, right? Yeah, so I would have set mine around about 147.50. That's me, right? But outside of that, man, this stock looks very strong. Looks very strong. Again, bird in hand, people want to push. Really good. Nothing wrong, right? Right? I ain't never scared. I ain't never scared. Take that bag, hindsight 2020, but bird in hand, again, base hits, not home runs. Get comfortable getting those base hits. It's going to build your confidence level. You'll get more better at accepting the value what your moving average is showing you, what the trend value is showing you here. As you can see here now, and you'll trade it even more, a little bit more methodical as you go forward. Yes, I'm looking at that turn all the way up. Yeah. Yeah, so the market is ripping right now. Again, we were talking about it earlier about, again, the use case of the market. I told you yesterday that 364, 384, 384.60. Just saying, y'all give my little flowers in advance. Like, give my flowers in advance. There we go. We completed that move, right? This is something, let me get the daily first. We started on the data. I want to show you what it looks like on the daily chart here. And then we'll move to the hourly. But this is just that bullish sentiment drift that I already kind of, mapped out and seen, kind of building and brewing. Y'all know watch the video, right? They're trying to get in the win wherever they can. They're trying to, close out some of that, 4th of July holidays drill, right? Now, but seriously, above 384, no bueno, right? Not even hesitating. See at this point. Just that same rounded bottom. As we do this line, of course, in advance. You guys already know that. We said this is where we're going. We do this line in advance. And we are today. Basically completed the move. All right. Got a small little tiny wick right there. We got the highs like 85.42 as of now. As of right now, we got 85.42. So we not only took out that 384 and the 384.62, but we went on and made an additional, 70, 80 cent dip on top of that. All right. So again, really, really good price action here. Following the, around the bottom value, following the guidelines and good lines, first points of the points of control, and utilizing momentum, bullish grip to come in and keep the market somewhat stabilized, given the fact that, we bottom out 362. We get if they get, get anything that they feel like is necessary to turn the market energy back towards somewhat bullish, meaning less rate hikes, less other headwinds that are out there that we haven't priced in yet. The market still say, we're still we're still risk on best we can to at least come back and take out some of our old areas against 392. That's gonna be the first area. Well, not the very, very first area, but we're talking about 3 and 4 today, but back towards the 387. And then from there, maybe up to a 390, 392. Then from there, of course, there's gap fill over here. Everybody got their eyes on the potential gap fill. They feel like if they can get the market back up that high, man, establishing new support above 400 would be like the biggest thing ever for them, right? And so they will be trying to do what they can. Will they be successful? Who knows? But we're going to trade the stock and gold aspects of the market best we can. So I just closed out my swing puts. I literally just closed out my swing put, right? So that's a nice bag. Right? I bought this put yesterday around about 378-ish, 377 and 378-ish, right? And then I bought some more today. I bought some that swung yesterday, bought some today, yesterday. Right? Pull back this morning. Y'all already know this. Right? Nice little bag, right? Nice bag. So that's a nice little kind of closing of that same energy we're talking about right now. I have one left, right? I have one left on the actual swing. I bought for Friday expiration. Right? And so we'll see what comes from that to get out of money close out this afternoon. But yeah, man, this bullish sentiment is just, you got to be able to kind of keep your poison, as one would say. If the sentiment gives you bullishness, hey, you stay in the game until they tell you that take your ball and go home, right? And so market's still trying to pump you in the back end of the last 20 minutes of the market here, Damien. And we got advances coming out in the next roughly around 350, right? So we'll see what that does if people still have a risk on kind of appetite going into tomorrow. Now that we've got the ISM data out the way, we got PMI data out the way, we got the jokes numbers out the way, and we got the Fed minutes somewhat out the way. So that still is sitting well with Wall Street at this point. Maybe they may get a chance to push this thing back up towards that 387, 390-ish, 392 area. If things kind of follow through in terms of this round the bottom pattern we've seen here, if they get their way, then 9 times out of 10, this thing should kind of take out the 20-day moving average at this height aspect of it, not the flat line aspect of it that we broke out of today, but take it up towards this line here around 387. You close above that, yeah, like the tops of these candles here would not be that far-fetched, right? But again, you need the data to work in your favor. You need the energy to stay, risk on. Everything needs to be kind of what a fine-tuned machine, right? Or the best recipe put together. That's now, y'all winning. You're eating, you're winning, you're trading the market, what you see, and you're not stressing about it. Because today was definitely a stressless market, even though it kind of sputtered in the very beginning. But when it turned, right? We got the data out the way. Wall Street accepted that. We didn't go really, too further below 380, which I had in this, my line in the sand for the SPY. I said 380 gonna be the support or the pseudo support, right? So we know you can account for a little spillage, right? So if you come down around about 379, 60 or 379, 80, that doesn't really constitute that support. It's completely broke. That means that y'all know Wall Street doesn't necessarily do whole numbers and half dollars to the T. We just said that's gonna be the area of interest of support to look for, right? The pseudo support. And we hit that area and we bounced. And now we are up there, 385.60 and still ripping. Right? It's ripping since been ripping. And I got to rub a little salt in the wounds of over rich that's on the counter right now. One of them Nvidia calls me ripping right now. One of them Nvidia calls me wealthy. Yeah, that'd be nice right now. Yeah, we are doing that. I sold see one solar. One for 305. So it's percolating a little bit. That stock. So yeah, man, Birmingham again. Birmingham beat 1 to 5th, man. That's all that matters. So I'm excited to see the family making a little bread, making some money, right? Doing what we do. Like, what's going on over Rich, right? Rich, he in the building. What's going on, family? Peace out, proud for you, right? What's going on? What's going on, family? Nicio, right? We got Nicio in the building, man. Shout out to you as well. Right? Happy to have you, family, in the building. Right? Shout out to you guys as well. Right? Shout out to y'all as well on this way back Wednesday. Shout out to Chris. You said, yep, AGRX as well. You're right. AGRX. Dr. Food. Yeah, we gotta talk about that. We had 2 minutes to talk about Dr. Food. I know I'm gonna have to come back on and do something really good on Dr. Food. But right now, it's going through that whole it broke out. Now it's going back to its crackhead era, and now they're going to really begin to produce, right? In that whole merger thing with White Knight and Next Meats and all this stuff like that. Because that whole industry has just been beat up. That's what's sad, because if you come out in as a unicorn company or a new company, and the energy of the market is not favorable, right? At a time you actually got something that the market probably can use, but they don't necessarily want to spend money for at this point, that could be detrimental. And they say timing is everything. Man, tell me about it, right? Tell me about it. So Dr. Foods is one of those stocks that we would call, I called it when it was like 0004, right? And it went all the way up to like, what we got to, like, 4 pennies, with like 4 cents, right? From 0007, right? 0004, 0007, where I was in. Some of the other family got in at 004, right? So I began to bring some family. A lot of those guys took it from 004 up to like over 2 pennies. Right? So that's a nice little thing, right? And since then, of course, Beyond Meat kind of the pullback. It's kind of the benchmark stock you want to look at for Dr. Foods, Next Meats, whatever, right? Faux meats, stuff like that. And the stock has pulled back since then. So I need to kind of go back and revisit it. But definitely we will get on that. What's over everything? XLEA, XELA, excuse me, also load up. One to look at as well. We'll take a look at XELA, excuse me. Let's see what that looks like as well. So yeah, this is a little, nice little, actually this one definitely in the downtrend as of now it is, but just kind of waiting for the bleeding to start possible. This for the RSI, definitely sitting at 28. In that perspective, yeah, this stock may have a moment where it may stop the selling, and then the buyers may come in. So let's see the last time it's sitting at around this price here. Actually, never, right? So this is the first time it's actually had the price discovery a little bit to the downside. And so whatever this causing it to bleed at this point, whether they done letting it bleed or not, that's to be determined. Right? So I definitely have to do the backstory on this one here. But yeah, the stock was trending up here around $30 a share. And just been kind of going down, beat down. I can see on the chart here. RSI just been going through the ringer here, going under 30 several times, as you can see here. especially when they start getting down towards the 22 and possibly even the teens on the R side of late. So somebody's definitely still selling. But at some point, the bleed has stopped. Now, there's still a story intact with this company. You know, there's still potential in the company. And yeah, we would hope that, you know, a bounce potentially should come at or around a certain point where all the sellers have somewhat dissipated. Now, this last candle right here says a lot. Look at the size of that volume bar right here, right? This volume bar right here was, at least on this particular day, it was over what? Over in this 600 some odd shares, 620 million shares were dumped, right, on this day right here. So whatever that was all about, at least it was traded, right? Not maybe all of them was dumped, but that was 620 million shares that were moved, and the majority of that probably was dumped, of course. But what was that? You know, what was that about, right? As you can see here, clearly here, with this candle here, right at above 20 moving average here, it pierced above it, then what failed again, came back under. That was a massive volume bargain. Man, look at that there. So yeah, you got to keep your eye on this one here. Might want to set some alerts on this one here, everything, and you know, see where that proverbial bottom is, because this is what we call price discovery to the downside. There's no proverbial track record or history that you can measure it up against. So this is all going to be dependent upon the price action. Right? So you got to keep your eye on level 2. You got to keep your eye on, you know, a lot of that, you know, the price action, but the management side of things, and they putting out, you know, certain pressures that may cause the market to see this as, you know, the company starting to make a turn for the better at this point after this kind of slow bleeding out. As you see all this red here, that's just constant. You see stuff like that right there, it's bigger than the value of the shareholder saying, yeah, we're just cheap, right? This is a management issue here. This is clearly management here, right? They're doing something horribly wrong, right? They're doing something horribly wrong. They're not putting out a press release. They're not explaining the issue, what they got going on, and people just sell it, right? They just sell it. It's like it's always done like 10 cents, right? Dirt cheap. It's at $30, you know, not, you know, long ago. It's at $30 a share, now it's at 10 cents. So yeah, that's problematic. That's very problematic. So hopefully they get this stuff here ironed out, man. You know, that's not, you know, as of now, yeah, it does look like a pump and dump, right? It just definitely looks like a pump and dump. So we'll see, and we shall see, right? So yeah, what's going on, Oprah Brandon? See you in the building. Our resident hospice in the building. Shout out to Oprah Brandon in the house. And how's your day, Cam?
I'm good. How's everybody else today? You hear me?
Yeah, we can hear you, man. Watching these fireworks, man. These people got the little Fed minutes, but they ain't in their feelings in a good way. They buying like they just hit the lottery.
Right. Got a good stretch off.
Yeah, they got that stretch off. Go real quick. Yeah, what you see going on today? Had a chance to see the thing, checking the thing out today?
No, nothing really. I've been focusing more of an aspect of getting my account set up. And then I've been looking at long-term plays. I'm still doing that thing where I get on Yahoo Finance and I look at, you know, the biggest losers for the day and the biggest winners for the day. And it somewhat goes back to that last chart that you just posted. It was an XLYA, I think it was.
XELA.
Yeah.
Baylor technology.
Yeah, that's done. I hate to say whoever put that out there, yeah, that's done, because like if you go to year to date, yeah, that's a wrap. I mean, they really got to fight.
Yeah, I know I said it's a management story here. The management didn't do a good job in detailing, you know, the extent of what's going on with the company thoroughly enough where you're going to have investors or even have an institution invested in the stock. But if it's just all, you know, retail type trades at this point, which probably is the case, but retail, you know, big money probably been left party, right?
Yeah.
Right.
Oh, yeah.
If it was at 30 and now it's at 10 cents, right? If any big money hang around, they just came in, right? They might be trying to trade it, you know, from a quarterly perspective, right? It's kind of fall within the 32D filing, you know, compliance. They may just say, well, you know, I bought it here just to see, you know, they might or whatever, right?
Right.
Yeah. It's like, man, it's like, they got to pull like it was at 38. 38 one day too. Yeah.
And just think if you had options trying to get out of this, options, that aspect, it'll be hard because
Yeah, I know that market.
Yeah, it's no market for options. Honestly, if it's at 30 cents now, you get in like what $1? I mean, you can try. Yeah, it's rough. But no,
it takes a whole lot to come back. What's going on at the end of the day? I thought they was fine. What's going on? What you spy? The QQQ. Oh, the Qs? But probably the same thing. Spy to get out. I'm saying, looking at this one here real quick. Let's see what they're looking like. What they looking like? Let me see what he at. Oh, it still look good, man. The spies are pretty 384.30, man. You know, it's only got the dollar off the food. The food's got a big ass bar. Oh, let me look at it. Oh, he got his money shot. On an hourly, it just hit resistance. There you go. You're up against resistance. Now that's enough, of course. You know, if you ran up into that resistance, like I said, did take box and we were talking about here. You ran right into the 200 moving average here. You know it's going to have some problems here, but it doesn't have to be natural resistance point. You're going to hit it and get slapped down, sense of what's happening. You pierce above, but then close above it, which is the whole reality of showing strength. You have to close above a major moving average. If that does not happen, that's problematic, right? At least on the short term, right? But if you roll it up into it, yeah, that's bad, right? It's money bad. So now you're just looking at, how much of this pullback here is just people taking profit after hitting major resistance, right? Clearly, that's the case. The error of interest would be to watch this candle next to it, right? So you would have to take out this entire candle in order for this to really show a lot of weakness. After having such a strong bounce over the last day and a half. But if it's inside this candle bar here, this green candle here, I would say this is this is normal. This is natural order things here. Right? It's basically what supply demand is. Profit takers from those who are just getting started, who caught it a little later, and so that's all it is. It's a changing of the guards, right? Like somebody changing the ship on its car. Right? Some of the old buyers are getting out, and the new buyers who just bought maybe somewhere inside the move or the pump up, in that this area, at around around the bottom here. Some of those guys right here have to get new holders until the market kind of pick a direction at least tomorrow if they're going to hold until tomorrow. But as of now, this candle here will be the area of operation that I will look towards. If we don't take this candle here out going into the close, then it may still signal a little risk on. Because as I said, if you bought anywhere at around, let's say 288.60, 287.70 area right here on the keys, you still got a cushion. Right? You still have a cushion on that position, I should say, into at least tomorrow and possibly Friday. But again, it depends on each